How do big companies process thousands of bills every week without losing money to fraud, mistakes, or duplicate payments? In the next few minutes, you will learn the complete accounts payable process in very simple English. Plus, the top interview question hiring managers love to ask. And don't worry, no complicated accounting language. Let's understand everything using a simple example. Imagine you own a busy coffee shop called The Daily Grind. Every week you order coffee beans, milk, cups. But you don't pay immediately when the delivery arrives. Instead, the supplier gives you 30 days to pay. The moment you receive the goods but haven't paid yet, that unpaid amount becomes account payable, also called AP. Accounts payable is equal to money a business owes to suppliers. It is a short-term liability. Why companies need a process? In a small shop, you might keep bills in a drawer, but large companies receive thousands of invoices every week. Without a proper system, companies may overpay. Fraud can happen. Duplicate payments may occur. Financial records become inaccurate. That's why corporates follow a 5-step accounts payable workflow. Let's break down. Step 1 is the purchase order, also called a PO. Before buying anything, the manager creates an official document showing what items are needed, quantity, agreed price. Example, 100 bags of coffee, $10 per bag. The PO is created before the goods are shipped. It acts like an official approval to purchase. Step 2. Goods received note. A few days later, the delivery truck arrives. Now the employee checks, did we receive the correct quantity? Are the goods damaged? If everything looks good, they sign a document called the goods received note or receiving report. This shows the company physically received the goods. Step 3. Vendor invoice. Next, the supplier sends an invoice. The invoice is simply the bill asking for payment. Now the company has 3 important documents: purchase order, receiving report, vendor invoice. These 3 documents are the foundation of accounts payable process. Step 4. 3-way match. This is the most important step in accounts payable. It is called the 3-way match. The AP specialist compares the purchase order, the receiving report, the invoice. They check quantity matches, price matches, item matches. Example, 100 bags ordered, 100 bags received, invoice also shows 100 bags. Everything matches perfectly. This process helps prevent fraud, overbilling, paying for items never received. Interview question. Interviewers often ask, what is the 3-way match? A simple answer is, a 3-way match is the process of comparing the purchase order, goods receipt, and vendor invoice before approving payment. It helps prevent fraud and payment errors when the match fails. But sometimes mistakes happen. Maybe the supplier sends an invoice for $1,200 instead of $1,000, or maybe only part of shipment arrived. This is called an invoice mismatch or variance. When this happens, the invoice is placed on hold. The issue is investigated internally. The vendor is contacted for correction. Interview question 2nd. Interview may ask, what would you do if there is an invoice mismatch? You can answer, I would place the invoice on hold, investigate the issue internally, and contact to the vendor to resolve the discrepancy before payment. Step 5. Booking and payment. Once everything matches correctly, The invoice is approved. The expense is recorded in the accounting system. Payment is scheduled. Now the supplier finally gets paid. Accounts payable versus account receivable. This is the another very important common interview question. Accounts payable, money going out, amount owed to suppliers, liability. Account receivable, money coming in, amount customers owe us, assets. Easy way to remember. Payable we pay, receivable we receive. AP Accrual explained. Now let's understand one advanced concept. Imagine milk cartons arrive on May 28th, but the invoice arrives on June 3rd. Even though the bill hasn't arrived yet, the company already used the goods in May. So the company must record an estimated expense for May. This is called AP Accrual and captured liability. Interview question 3rd. Interviewer may ask, what is AP Accrual? Simple answer. An AP accrual happens when goods are received before the invoice arrives. The company records an estimated expense and liability to keep financial statement accurate. Final summary. So let's quickly recap the 5-step accounts payable workflow. Create purchase order, receive goods, receive invoice, perform 3-way match, approve payment. Doing accounts payable help companies protect cash flow, avoid fraud, maintain accurate financial records. And now, you understand the full process clearly, instead of just memorizing interview answers. Practice these interview responses. If this video helped you understand accounts payable in simple language, don't forget to like, subscribe and share. See you in the next finance and accounting tutorial.